Hello, and welcome to the Grow Places podcast, where we explore the virtuous circle of people, growth, and place. Brought to you by Grow Places and hosted by our founder, Tom Larsson.
Adam, thanks for your time today. Thank you for bearing with me as we set up in this room. It's all good. Fellow podcast host, and we all go about things in different ways, and this is my kind of ad hoc way of setting the cameras up. So thank you for bearing with me today.
No, we're well accustomed to technical glitches.
Yeah,
so
exactly.
It happens.
Exactly.
It happens to the best of us.
But it's good, and the listeners will never know because I never introduced the podcast in that way. It's all good. So I'm really excited to have this conversation with you today. The work that you do at LifeProven, is amazing, and keen to kind of lift the cover on that a little bit, why you do what you do. But firstly, I'm really intrigued. When we were filling time during this setup today, you said you're in a very exclusive club in terms of a co-working space which is only for social impacts companies and entrepreneurs.
Any impact-focused business.
Exactly.
Yeah.
So what makes LifeProven an impact-focused business, and why do you think you got through the door there?
Big question. So I think inherently that is the founding of our company, is to have a positive impact. So we come from a background focused predominantly on environmental impact, having a positive impact there, having a positive impact from a social perspective and also from a financial perspective. And when we connect the three of those dots, we find it's a lot easier to move budgets and make things happen a lot quicker, and you're not pushing a boulder uphill anymore, you're pushing on open doors. When those three things align, things just get approved and move through a lot quicker because everyone through the sort of value chain is getting some sort of benefit.
Yeah, absolutely. And so how do you see that kind of those different actors, those different roles within the kind of real estate chain? And because your model is really interesting insofar as you are across that, aren't you? Your clients, your partners
absolutely.
are developers, investors, and every kind of element within the supply chain. So do you have a similar conversation with your clients, with your partners at those different levels?
Absolutely. And I'm just thinking how best to frame this. So I think that's one of the most misunderstood and misappreciated elements of the real estate industry, is how different layers think and operate and what the risks and opportunities for them are. And so a simple example, the risks for a contractor and sustainability risks and impact, or whether that's a risk or an opportunity for a contractor, is very, very different to a pension fund who's going to be the end owner of that. Their perspectives are completely different. Their involvement and the duration of their involvement in that project is going to be very, very different. One's might be there for 2 years, one's going to be there for 60 years. So the more layers that we can understand what is important, what's not, what's a risk, what's an opportunity, over a very long time frame, helps us better to communicate between the layers and basically connect and position things so everyone is clear as to why we're making certain design or operational decisions or investment decisions, and that can be communicated to each layer in a much more direct, succinct, and transparent way to then hopefully move people through quicker.
Yeah, interesting.
Yeah, I think like ESG, sustainability, impact, I think those words just confuse people as well. Like having, and it probably means different things to different people. Like if you ask someone, what does ESG mean? And you ask someone else, what does ESG mean? You'll probably get two different definitions. And that is also a challenge. So just trying to remove that from the sort of narrative to bring everyone back to what is the common thread of what we're trying to achieve, and then bringing that to really, really simple language so people understand what our objective is from an environmental or a social or a financial perspective, and how will that design and operational strategy achieve that, and what part does that particular stakeholder play in that journey, whether it's they're involved for a month, 6 months, or 30 years.
So do you have a kind of like a life-proven version of ESG, like kind of your kind of, whether it's purpose or method or kind of Because as you say, you're part kind of responding to the various actors within the supply chain, like the brief that the client gives you.
Yep,
But I'm sure
absolutely.
a large part of it is actually kind of educating or moving things on, and interested in kind of like, for you as a business and also for you personally, kind of like what that means to you, what that means to you as a company, and therefore what do you try and promote on the relationships you have.
Yeah, that's a really good question, actually. And interestingly, that is evolving constantly. That framework or our approach and our methodology behind it, because if you think if we ignore ESG for a second and we go globally, you've got at any one point there are macro challenges that are happening constantly. So you've got things like climate change, resource shortages, social inequalities, and those things are happening globally at all times. And then underneath that, you then have micro challenges, which would then be based on, I suppose, probably your geographical location. So, for example, climate change in the UK, the potential impacts of that are different to climate change in the Middle East or in Africa, as a simple example. And how the government and also large institutions adapt their behaviors and how they set laws, how they set regulations is obviously very different depending on where you are. So you have to understand the macro, what's going on globally. And if you've got an international or a global portfolio, or you're operating globally, you then have to watch many different balls at the micro level, because laws, regulations can change in different geographical locations and can change with changes in politicians who get appointed, like on a dime. And that can have significant regulatory risks or issues with your portfolio that you have to navigate very, very quickly. But then, so within that layer of the micro challenges, you've obviously got laws, regulations, and market demands. So tenants, occupants, consumers want certain things, and their behaviors and interests in what they want to buy or what they want to rent is different everywhere in the world. So being very attuned to that in terms of where you are, what you're providing, and how that then influences what environmental performance is, social performance, or governance, which could be classed as resilience for being future-proof, can shift and change. But if you boil it right down to simple definitions, we can break it down into the tiny categories if you really want to, but that is in a macro setting is how we sort of approach it. And you've got to be very attuned to what's changing and shifting constantly.
Yeah, no, super interesting. And so, we're sat in London today. We're both based here, our businesses are based here. But as you said, that macro lens and also that international client base that you have. I think in London, sometimes rightly, sometimes wrongly, we like to think that our industry is, at the forefront, is kind of doing things really well. And as I say, sometimes that's the case, but other times we can definitely learn from other places, other cultures, other businesses, parts of the world. So does anything kind of come to mind when I say that to you about, this place or this company or this kind of this climatic response is really fascinating that we can kind of learn something from practically?
Really good question. So from my own personal perspective, where I am curious and most interested is the investors that have identified environmental and social performance as a commercial advantage and a commercial opportunity, and they have been able to leverage that to having a commercial advantage, is a significant growth area. And I would say a very few investor developers have unlocked that fully. And one of our clients, BlackRock, I would say they are obviously the largest asset manager in the world. They have very smart intellectual people in the team. And as a result, they have a very sophisticated understanding of how to leverage environmental and social activities to then have a commercial outcome. And as we mentioned at the beginning, when you can align environmental, social, and financial outcomes, it's a win-win-win. And effectively you are creating a more resilient, high performing asset. So I would say companies like BlackRock would be a business to watch and understand how they're positioning their communications externally with their investors, but then also internally what they're doing from a development perspective. And they're obviously invested in loads and loads of different things. We only work on a real estate capacity for them. But from them, even with the changing winds in America around ESG and that being quite politicized, internally nothing has changed from them. They've been absolutely steadfast in their approach that they view environmental performance and social performance as fundamental to their long-term financial outcomes.
Interesting, yeah. And obviously you don't need to give too much away, but like what would be their kind of key performance indicators, or kind of the things that put the meat on the bones of that, that conviction? Because as you say, there is shifting sands globally at the moment, and it would offer the likes of BlackRock, some of these bigger entities, like if they wanted, the ability to kind of move backwards or sideways if they wanted. But what do you think almost for them is that kind of underwrite, if you want to use that kind of terminology for this?
Meaning, why are they positioning that way, or what is the evidence to say that they've achieved it? Which one?
No, I think both would be interesting, but I was thinking actually the former. Yeah.
Okay, so I would say there's an element of thematic investment, which for those listeners who haven't come across that, it's trend-based investing. So you're looking at you're looking and skating to where the puck is moving to, not where it is now. And they're effectively looking at what is happening globally, what are the challenges globally, where is money moving and shifting to globally, what are the risks, opportunities, and that's where they're positioning for long-term holds. Now, I think where some people and commentators get ESG investment and a green premium or a brown discount wrong is they talk about it at a high level, but everyone has different investment parameters, and that's where it becomes unstuck. So you've got ESG. So a simple example would be you talk about ESG investing as a green premium, but are you talking about real estate or are you talking about equities? And within equities, what metric or framework are you aligning that to? Is it MSCI? And then what is the validity of that? And that is wholly different to the ESG performance of an individual building, right? And if you imagine it in the simplest form of an individual building, it's how does that building influence the planet in its operation? And how does the planet influence it in terms of, is it in a flood zone? Could it be flooded and then have an insurability incident? So how resilient is it? How much is it negatively or positively impacting the planet? And how resilient is it to the environment changing and impacting its performance? Shift to socially, how is that building influencing the health, well-being, and quality of life and satisfaction of its occupants? So do people actually want to go there and spend their time there? Do people want to buy there? Do people want to rent there? If yes, you're then going to have an asset that has higher demand than you have supply, because people want to spend their time there. That inherently is a better quality asset than something where people go, I don't want to spend any time there because it makes me sad being in that room. You then have less demand than supply. So then you've got a financial issue. And then financially, where I think the domino has fallen quite heavily in the favor of ESG or sustainable investing, is the financial piece, where we're now starting to get ESG or sustainability linked bonds and sustainability linked loans that offer discounted debt facilities and sometimes equity. So a simple example is a company called Puma Property Finance. They will offer up to a 1% discount on development finance for developers who will achieve a certain environmental standard. And a 1% on a £100 million loan is a material financial benefit, right? And if that asset can also navigate through regulatory change because it's got better standards, better quality, it is positive in terms of its environmental impact, it isn't going to be impacted by climate change, and it provides a service and a design that actually improves people's health, their well-being, their quality of life, so they want to spend time there, you've got 3 pillars all lined up for a long-term resilient asset, which is very investable, and it's also very desirable from a tenant or an occupant's perspective. So we specialize in, I suppose, helping the largest investors in the world and also the most innovative investors to create leading, very sustainable, best-in-class, resilient real estate assets. That's literally why we exist. And the reason why we focus on the largest is because, coming back to your first question, that is where we can have the greatest material benefit and impact on the world. And the reason why we then focus on developers who might be small, much smaller, who are doing something that's very innovative from a sustainability perspective, is because we can take those learnings and integrate that back into the large portfolios, and we can use that as well to educate the rest of industry about how we could be doing things better, and if we can help accelerate that movement towards better understanding and an evolution of knowledge sharing. And then if the whole market can move towards that direction, then everyone from our perspective will be a winner. The planet will be better, people will be happier and healthier, and financially more prosperous. Did that answer your question?
Yeah, no, totally. And you know, you have something I really admire about you, Adam, is we did a podcast where I was a guest on your podcast.
Yeah.
And I listened back to it 2 or 3 times just because you naturally have a very, very good way of just breaking things down and dissecting things into like a really kind of logical and understandable, like step-by-step process. And I want to say thank you for that, because it was great, like listening back to it, because I have a tendency to sort of speak in maybe slightly, you know, more abstract concepts or bigger picture concepts, and it was just like, okay, so what you're saying, what you mean is bang, 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 and that was just like so valuable. And I think you did that with that example there. And so if I ask you then to kind of maybe go into that kind of like that visionary space, that kind of thought-provoking space, everything you know from the industry, everything you know that you just described in that example, what big entities like BlackRock are looking at, what development regeneration companies like us are doing, and what people on the street, communities really need. And you now have the full reins to create a environment that really improves people's quality of life and kind of delivers some of these social and environmental benefits that we were talking about. You know, what does that place look like? What does it feel like? How is it governed? Kind of, you must have a sense from doing all this work
absolutely.
in the process what that should be. And I'm just really intrigued to know what you think about that.
Can I go on a complete tangent here?
Of course
and I'm
you can.
going to explain the origin of our business and then how that has evolved to then answer your question.
Yeah, go on then.
So we historically, so my background is a development manager previously, and my business partner Jordan, he's a quantity surveyor stroke project director. And the founding of our business, we used to run we used to work for a London-based boutique developer doing sort of new build and regeneration schemes across the UK. And through one of the projects, we were running a scheme in Bristol in the Redcliffe Quarter, which we were negotiating a long lease through the development phase to a local university. And through that negotiation phase, the university started asking us questions about the design. So the design brief from our client, which was our company, was, I want as many units in as you can get, as small as possible to cram them in. And at that point, we didn't know anything about environmental, social, governance, resilience, future-proofing. We just thought, yep, makes sense from a business case. So we've evolved that design. The university started, who were taking a long lease for 25 years, and from their perspective, and this is where we got things wrong, we didn't appreciate their perspective. They had quite negative press and media and some very significant social challenges around mental health and stress, anxiety, and suicide from their students. And from a student's perspective, they obviously are in a very transformative period in their life, going from living at home at school to new social networks, new city, new everything, and that can be a very challenging time. Through that period, the university asked us, what design how does this building perform socially? How will it impact the health and well-being and quality of life of our students? And if we wanted to improve it, what design elements should we change? And that was the first time anyone had asked us, as a development manager and a quantity surveyor and a project director. I have no idea how it's going to perform from a mental well-being and mental health perspective. So we then asked the design team, who were a very experienced design team, and they came back and said, we have no idea. And we said, well, what things could we change to improve it? And then the feedback was we could change the carpet colors from white to cream, or the wall colors, or we could maybe change the bathroom layout. And we asked, well, what benefit would that have? We don't know. And it was at that point where we realized there was a fundamental misunderstanding for how the design and operation of an asset actually influences both the environment and socially over its full life cycle. And unfortunately for design teams and contractors, they will design a building and then that building will operate. But as soon as it hits practical completion, they're on to the next scheme. And there is 60 plus years, 70, 80 plus years of operational data that from our perspective should be being fed back to the original designers and the original contractor team to help inform them so their knowledge is getting better. So every building they design, they're learning from the operational outcomes of all of their historic projects that they've done. And that is like gold dust, having that information. So at that point, that was sort of when Jordan and I decided to found the business. And we started from a very humble position of we literally know nothing. We know the numbers, but the numbers didn't add up because as soon as someone raised a social question, that then we couldn't negotiate the deal, which underwrote the whole scheme. So that's a very good example of a social issue, challenge, impacting the financial viability of the scheme. And at that time, we didn't have the tools to be able to navigate that situation. So we then spent 5 years, and our founding thesis of our business was effectively the UK is a very small landmass geographically. It's tiny in comparison to its population. The population is going to grow. Typically what happens is urban sprawl. The cities will go out. We will then be taking up agricultural land, which grows the food to feed the people. If we're taking up more agricultural land, which is already stressed, and our food production in the UK is limited, we're going to get to a tipping point that we've scaled too far out. We can't actually grow food and have green spaces to support the people on the landmass. What then happens? Because we can't extend the boundaries of the UK. And it was at that point we then realized, okay, for this to actually be scalable and to protect and preserve the UK, planet, health, well-being, all of that, we're going to have to build more densely. We're going to have to build in and up, things that are located next to key transport amenities, so people don't necessarily need to use cars anymore because they're within walking distance to key train stations. And if they can have all of their retails, effectively the 15-minute walkable city concept, okay? But through our research and basically unpicking our own curiosities, we identified that if you build small spaces, termed shoebox, there's a social impact. People have well-being outcomes and they don't like living in a box. So we then came to another sort of financial pinch point that we said, well, from an environmental perspective, we have to build more densely, more efficiently in existing urban areas to then get use of existing retail, existing amenities, existing transport infrastructure without building new on green space. But we have to build smaller, which then impacts the social element. So then people are less happy in that building, and then therefore they're probably not going to want to pay for those buildings. And then we haven't balanced E, S, and the financial. So then we looked at, okay, what do we need to do in those spaces to then make people happier and healthier to improve their quality of life? Because if we can achieve that in any particular space, then that's going to be desirable. Demand will increase. They'll be happy to pay more, whether they buy it or rent it, because they're happier and want to stay longer. And then we've also connected the environmental piece. And that was the founding question of our business. And the way we have approached it as a company is we don't know the answer. I don't, as an individual, I don't know. But what we do know is that there are millions of buildings and everyone has a viewpoint and a perspective that is unique to them. So we should go out and ask them about their perspective and their space and what influences them, and use robust data science to collect that information. And when we can track and analyze that across tens of thousands of people, we can pull very strong insights about what is impacting their physical health, their mental well-being. Is it design related? Is it operationally? Is it management? Is it location? What are the key trends that result in higher health, well-being, and quality of life outcomes? Why is one building or one area better than another? And that was really the founding point of our company. So we then founded a platform called the Real Estate Wellbeing Metric with King's College London. And the whole premise of that was we don't know because we aren't everyone. So, but if we can give everyone a voice to share their experiences from how their space influences them in their daily life, and we compile all of those together, we're going to have a very robust data platform to make better informed decisions from, and we can share that information transparently. So from a social perspective, that was always our founding. And what just some very helpful insights to which was some of the things that took us by surprise from that data and still does, is out of curiosity, what do you think the number one design attribute most strongly associated with a better quality of life in a building is?
What people say, or what do I think it is?
What do you think? As in, what do you think it came back as? Just complete curiosity.
Yeah, I think people would say the quality of the outdoor space, actually.
Very interesting. So it actually came back is the number one most strongly associated design attribute for better quality of life was their social connection to people in the space, in the building, and in their local community. Yeah. And the higher their level of social connection, the better their quality of life outcomes were, which for us was like fascinating, that it's not necessarily always about a design, it's about how connected they feel to people and how connected they then feel to a local community. And that comes back to why we also were really keen to have you on the podcast, because I know that's a founding element of your business is about improving quality of life of people. The second layer, which comes back, which was the second design attribute, which is probably something that you would expect, was the access to natural daylight. To the higher you access to natural daylight, obvious better health, well-being, quality of life outcomes were. So basically what we did is we ranked all of them in order, and things that we probably thought would have been higher, like the amount of space you've got, weren't actually that strongly associated. They were very, very low down the list. But what things were higher in a residential setting was how much storage someone has. And then you start to connect dots to go, yeah, if they don't have storage, they put stuff everywhere, which creates clutter. Clutter creates anxiety. Anxiety builds over time. That then causes mental health issues. And then that then reduces their satisfaction in a space. So that's how we've approached it, is we don't rely on what we think. It's what is the data telling us? What does other scientific research tell us around things like how much exercise should we be having? What should our diet be to optimize our physical and mental health? And pulling in as much data and insight and then tracking, okay, across our portfolio, how active are our residents or our tenants? Are they meeting the guidelines, yes or no? And if they're not, is there a reason why? And is there something we can do or facilitate to help them start achieving that? And it's just adding in all these tiny layers of information to help you and the investor, investment manager, asset manager, development manager make better informed decisions based on people's behavioral outcomes. I've probably gone on a massive tangent there.
Yes and no, because you're kind of touching on some really like fundamental principles there, which I think is stuff that we firmly align with as well. It's like, this notion that any one company or actor kind of has the definitive vision about a place. I think is fundamentally wrong, and the model that you're describing challenges that, and I think that's a great kind of insight into that, and also, as you say, kind of actually when you speak to people, the things that we think they probably value about places is actually not necessarily the things that we would put value on.
Yeah.
And so within all of that context, you've kind of touched on some of the principles there, but like this imaginary neighborhood that we're creating in this conversation, those principles of quality of life, those components of quality of life that the neighborhood should, most likely kind of exhibit, that what from all of your kind of data inputs from the top down, from the bottom up, kind of, what do you at LifeProven, do you kind of group those? Do you kind of have a kind of quality of life metric in any sense, or kind of maybe you could kind of talk about that and how you've resolved that?
Yeah, sure. So one of our sort of founding services, which has evolved over time, is a platform called the Real Estate Wellbeing Metric. So similar to a quality of life.
Yeah.
So it's effectively a user survey. So we distribute that to occupants, residents, tenants, people who work in buildings. So if you've got reception staff, etc. And we're trying to get as many insights from them, from their specific perspective and their interaction with that building as possible. And the survey split into key sections. So we're asking socio-demographic information about them as an individual, how much time they spend in the space, what they do in the space, what their background is, how they travel to and from the building, that sort of information. We're asking them how they rate the design, so how much natural daylight, their thermal comfort, their views, their access to green space, how they rate it as their perception. We're asking them questions around the building management, so maintenance, security, how safe they feel, those sorts of things. And then also about their health and well-being, which is the fundamental piece that connects all of the dots together. So we're asking them questions about how active they are, how happy they feel, and we're using scientific or internationally validated metrics for health, well-being, and quality of life to do that. Then when we pull that data in, we're obviously tracking where the information is coming from. And then when we're pooling information, we can then start to compare one building versus another, or one portfolio versus another, or one region versus another, or apartments versus houses, or a commercial unit versus retail or industrial. And that is where the value comes from in the comparison against that versus UK or global averages in terms of health, well-being, quality of life. And that's where I think, which is the part of our name, Proven, LifeProven, is we are using data to facilitate and evidence our decision-making and support our decision-making. It's not coming from, we think it's this data is saying this, and we use that to then, coming back to the thematic investment point, we use trends and research and data to support our decisions because we don't have all the answers, but if by following this approach, we can gather as much intel as we possibly can to hopefully then make better informed decisions. And the benefit of this is that survey we issue every single year to each asset. And what is the most valuable thing from that is we can baseline a building, and year on year as we make incremental changes, whether we make a design change to the building or an operational change to the building, or even something as small as the way we engage occupants and feed information back to them about what's happening to make them feel more connected, we can actually track and see over time their health and well-being changes and also their satisfaction with the building change. So we can break that down into very trackable KPIs year on year. And when you're tracking that over a 5, 10, 15, 20-year period, it's quite rewarding to see shifts and improvements in people's quality of life outcomes and their satisfaction with where they live or work as a result of capturing their insights and perceptions and feeding that back to them to then make more informed improvements to that portfolio to help them based on what they've told you.
Yeah, fascinating. And so I'll use BlackRock in this example, just because of the name. No opinion on that per se, but in this example, so if you had the most senior person from BlackRock that you deal with, and you had them in a room with an average individual resident or person who uses their buildings and uses their spaces, you put them in chairs like we are, and you kind of sat there sort of moderating or mediating a kind of conversation between them. how do you think that conversation would go? How do you feel? Do you feel like they would both be kind of having the same vision about the place, or talking about it in the same way?
100% yes. And the reason why I say that is because the vision of the occupant is being fed back to BlackRock, and they are using that information to make better design or operational decisions, because they know, if coming back to the point we made before, if they can create that space to have a better experience, that occupant and tenant is more likely to stay longer, which then means that supports and underwrites the financial performance of that asset long term. So if we can continually adjust, adapt, and evolve and improve an asset, even through its operational phase, if that person can stay longer and bring more people to the building, whether it's commercial, industrial, whatever it is, residential, then that is underwriting the long-term financial performance of that asset.
Yeah. No, I think that is fundamental. That model that you're doing.
Yeah.
And it's such a, we see like the role of what every element within the chain, but particularly the kind of middlemen entities. So the likes of LifeProven, Grow Places, where you're not the ultimate money and you're not the ultimate occupier. There's such a responsibility, isn't there, in that to kind of to sort of to mediate in a really in a nice way between kind of like what do people want, what are people's expectations of places, how can we talk in languages that are both kind of related to a financial report and related to a conversation in a village hall or a town hall. Like, how can we kind of have those kind of conversations? And I think the more that organizations do exactly what you're just describing, which is to try and speak multiple languages, wear multiple hats, whatever cliche you want to put on that, and actually use real data, use real kind of conversation, real survey, real input, and then feed that back to the front of the next project or the next operating cycle is so valuable. And I think if more entities and organizations did as you're describing, I think we'd have much better functioning places and much better quality of life for people. So it's great what you're doing on that front. One kind of aspect about I'll call it ESG, call it quality of life, whatever you want to call it, but it is kind of affordability.
Yeah.
So
in terms of a rental,
in terms
sale.
of of like everyday life affordability for people.
Yep.
We're both of a similar kind of generation. Different generations feel the pinch, so to speak, quite a lot. In different ways at different times. Now, at the moment, obviously, someone who's a teenager, a 20-year-old, will have struggles sort of buying a house, or often even cost of living relative to their salary. You speak to my parents, and they go, "Well, we didn't have it that easy. We had 15% interest rates. So every generation has their kind of economic environment to live in." But I think it's fair to say that inequality is a big thing, and particularly in dense urban cities that are attractive, like London or Tokyo, or wherever it may be. So I'm always interested in how the kind of affordability piece kind of fits into ESG metrics, ESG frameworks, ESG reporting, and I think I'd be interested to get your take on how you view affordability, as whether it's its own thing, whether it's a component of quality of life, whether it's an output. How do you see that?
No, really interesting question. I'm going to connect to one of our previous podcast guests called Paul Clements Hunt, and he is the man who is known as coining the phrase ESG. So he invented it and coined it through the UN. So really, really fascinating guy. And on the podcast, I didn't know this, but he explained to us that social inequality is the number one negative impact towards climate progress and environmental performance. And how he described that is, in third world countries where social inequality is at its worst and you've got the highest levels of deprivation, trying to adjust their behaviors to be more sustainable is near impossible when they have very little resources available to them. And when there's that challenge is magnified even larger when it's a very large percentage of the global population are in that bracket. And that in itself, from a global perspective, is one of the world's biggest challenges. If we want to have environmental progress, then we have to focus on social progress to have social equality. But then if we're bringing that back to a UK perspective and looking specifically at a real estate perspective, obviously we know affordability is fundamentally linked to quality of life. You have less money to spend on good quality food or activities or social activities to be socially connected, or physical activity outcomes that are fundamental to underpinning a good quality of life and better well-being.
No, fascinating. So kind of stepping back from kind of almost stepping back from everything we've talked about, zooming right out to you personally.
Yeah, go on.
You know, you're clearly like very purpose driven in what you do. You kind of, you know, you've talked during this conversation about you know, you work with the biggest entities in the world because that's the opportunity to have the biggest impact. Where does all that come from in you personally, do you think? You know, aside from the business, like, why does doing this motivate you? Why does operating at scale motivate you to have that bigger impact? What's that emotional kind of reason and some of those deeper lying values for you?
Oh, deep question.
Yeah.
Promise I won't cry.
It's all right. We did say, I'm not, to be honest, I don't have that skill of Stephen Bartlett.
Breaking someone down into little pieces.
Yeah.
No.
It's,
I think a really short and average answer is because I can. And I think personally, I'm quite curious as an individual. I like to learn. I like to listen and be educated by other people, and other people doing really inspiring things. And I think being surrounded by people that are doing amazing things and pushing themselves because they see, maybe they have an inner belief themselves that they could be doing more and have a bigger impact and live a big life, right? And I've probably been quite fortunate to be surrounded by quite influential figures through childhood, adolescence, etc., of people who live a big life. And I've always thought, I think I'm capable of doing that and doing more, and why wouldn't I? And I think I'm very fortunate both with our clients. They operate in a similar capacity, that they are highly motivated individuals to be the best that they can be in as individuals and as advisors and developers and investors. And I think also internally in our business, that's been a very core fundamental part of our recruitment and our culture, is attracting other people who it's more than just a job for them. It's a way of life, in that they believe in using their skills to deliver more impact. And selfishly, the more impact we've seemed to deliver, the more success we've had back, that people then want to work with you more because of the outcomes that you've delivered have been positive for them and others. So there is obviously a commercial benefit from that, and by if we can deliver a fantastic service and people have a great experience, and that's everyone that we deal with beyond the person who pays us, then I think it's a win-win-win, and we get to pat ourselves on the back as that we've done a good job for the planet, future generations, because that's obviously with me with children is a big driver, but also we're capable of it. Why wouldn't we want to push that to be as best that we can be and have the best impact that we can, both externally with clients, projects and their assets and their occupants, and also internally with our team.
Yeah, no, absolutely. And that's very well said. And you know, so if you know, I know we don't necessarily like doing this, but if you project to being an old man when your kids are a bit older and they're in the world that you've helped to shape, you know, what kind of hopes do you have for that kind of environment that they're living in, that quality of life that they're going to experience, and kind of how we've got there through the work that we do?
Whoa, now that is a big question. What are you asking? What do I see the world looking like at that point, or what would I want it to be, or how?
Let's go for what you want it to be, because I think that's hopefully a nicer note.
Well, obviously, not worse than what it is now. That's because if it is, then we've catastrophically failed as a generation to take what we've inherited, and we've squandered such an amazing opportunity. And there's a YouTube video. It's like 2-3 minutes, and it's called I think it's called The Blue Dot. I think it's have you seen it? Heard about it?
I've heard about it. I haven't seen it.
Right. Okay. I posted it on my LinkedIn. It was probably like 2 years ago. And basically, it's a perspective from an astronaut, and he's zoomed right out in the universe, looking at this tiny little blue dot of obviously the Earth from thousands and thousands of miles away. I don't know how far, a long way. And he was just, it's I don't know if it's a poem or like a very short story explaining how inconsequential the Earth is. It's just a tiny little speck of nothing in nothing. And then when you zoom in, you come right down to your daily life, and we think we're so meaningful and impactful in everything we're doing, and which, like, everyone has the power and ability to shape and change the future, which is an amazing thing, and that's what hopefully drives a lot of people to have a positive impact. But I like to think that we, from a universal perspective, are just a tiny speck of dust, but we have been given such an amazing opportunity of life on a planet in a universe, and we need to not squander that. And when you look at how small the planet is, and we've got a very small ozone layer protecting us from space, you go, geez, we're really playing with fire here, that if something goes wrong with that and we take a path that we shouldn't have, there's no coming back of fixing something like that. So I like to think that in what we are doing, and that was why, so just going back to sort of our founding of our business, Jordan and I first started doing investments ourselves. And then we very quickly realized we were not going to have the impact and benefit on the planet by doing that, because we were just too slow. So then we changed tack, and coming from an advisory background, we went headfirst into, well, we can use our beliefs, our approach, to help advise the largest investors and investment managers. And then therefore our advice can then have such larger positive benefits and impact because we're operating at a significantly greater scale. And hopefully through that, we're then creating an environment where environmentally, the planet, ecosystem, biodiversity, animals, plants, etc., all of that is preserved at the very least, and we're not degrading it for our children's future. And from a social perspective, you would hope that inequality is going in the opposite direction than what it is today. And I suppose we can only influence what we can influence, right? We get a pretty short window on the planet to try and do that, and it takes a while to become good at anything. So you can only sort of pick very few shots to take. And this is ours. We're focusing on the real estate space because it's what we knew, what we loved, and why we got into it was we like buildings and real estate and how people interface with that. And if we can leverage that to have some sort of positive benefit to hundreds or thousands of occupants through time, and then that building operate over 60, 70, 80 plus year period, and then continue to help people, then that's hopefully that's the best we can do.
Adam, thank you very much for your time.
Thank you for having me.
Fascinating, and all the work you're doing is so good, so well needed, and I really look forward to our businesses collaborating together in the future.
Tom, it's been a pleasure. Thank you for the podcast and the opportunity to chat to yourself and your lovely guests.
No worries. Cheers. See you later.
Man.
Thank you for listening to the Grow Places podcast. For more information, visit growplaces.com and follow us at We Grow Places across all social channels. See you next time.